Good afternoon, and welcome to the FX Daily Roundup with ForexAnalytix. ForexAnalytix, we're going to move this out of the way. And we've gone and seen the euro continue to go and pair back. We had our buy chart resistance, I think it was a 23. I'd have to go and check. Yeah, 12.25. And one of the reasons we also saw the euro come under some pressure, part of it is linking it to the cable, which you can see here is really took a drop down, or really with the woes in the UK, and considering that would be potentially a drag here is what the thought process has been. Obviously, we saw the cable really take a good dip. We actually had our buy chart support before the UK data came out this morning at 24 even, and that's where the market, I mean, it looks like we may have taken it out by about 5 pips maybe. But we're kind of holding here, but really at these lows. I mean, the starting pairs are really in a world of hurt here. Hang on a moment. They've really come under some kind of a pressure. Well, obviously the guppy, the starting versus the odd. They all, like I said, the starting pairs are really having a very, very tough time of it. We were looking for a move down here to 77.40, but we even bypassed that on the way down here. But we talked about, being careful. We mentioned this yesterday because we could see a bit of a snapback. And we're seeing a bit because we said if we break here, when here's the 77.40, you could run your limits beyond that if you'd like. Make sure you tighten up your stops. But we could see a dip and then a little bit of a snapback. We have had a bit of a snapback to the tune of about what, let's see, came down here, I guess. Wow, tune of well over 60 pips so far, because we talked about the disparity between the two exponential moving averages and how wide it had been, and how we had seen when we see this disparity, you can see here and here and here, we've seen snapbacks. We said it may not happen in one just day. It may take a couple of days. But as I said, we've seen a pretty good little bounce back. Oh, wow, we got as low as 30. So we saw a 60 pip bounce back on this, but we were talking about this yesterday, the disparity between these two exponential moving averages. We're going to move back into the majors, as I mentioned about the euro dollar. So we're kind of holding our own here, but it's been under some tremendous pressure. Also, the bunds had continued to move higher. They've come off those highs, but obviously higher prices on the bunds, which inversely is going to be lower rates, continues to put pressure on the euro. The dollar index even got stronger than I would have thought here. We had our bias chart resistance here at 97.21. I thought there might be a stretch to 26. Well, we came out with the data, and the data really gave it a chance to really push it up a little bit higher, and higher we did, all the way up to 97.39 here. This was like a little bit of a secondary resistance level that I was looking at, but we're still holding up very, very well against the dollar index. When you look at this here, after losing, we had gotten above that trend line, and then after falling below it, you would have thought, okay, there's gonna be some pressure. We might make a move up to maybe 97.02 and then roll back down the hill. But we've come on, and it's gonna be huge today if we close above the 97.31 in the cash dollar index. Boy, keeping the pressure on here is the dollar. And moving on, we saw the peso really make a nice rebound here. I know Blake was buying it this morning. I think he mentioned he accidentally bought even more, so he had a pretty good sizable position. So well done, Blake. Here we saw this move higher here. He has a very, very long-term trend line that I was sitting on, and he mentioned a risk reward of basically 1 to 6, maybe 1 to 5. So that's why he was playing it, and certainly has worked out well for him. Moving on to the Canadian dollar, where we still have our bias chart resistance, or support, I should say, at 29.95. We made a pretty good little stab down here. Still making it, not that far away, about 25 pips away from that bias chart support. We've since rallied, had a nice rally off of that to come up to 30.50, but our resistance comes in at 30.77. Getting back to the cable, this market is really under some kind of pressure. We came into this morning, if you're a subscriber with ForexAnalytix, you're able to go on and catch the European crossover webinar at 4 a.m. Eastern time. and it's then recorded about to be presented about an hour and a half later. Stelios is there, and we cover the scalp levels or short-term trading levels for the day. As I mentioned before, we even got the UK data, because this is the second pair. We start with the euro, second pair we go to the cable. So we had 24 even as our bias chart support. Low for the day is, oh, well, let's shoot. I guess we hit it around the nail on the head. I guess it's right at 24 or 23.99 and a half. But it's not like as if we've gone gangbusters off of that level. But like I said, the news that as we came into the European crossover before the release of the employment data was that basically the market was worried about continued Brexit saga, and also with Boris Johnson. It looks like, man, that's been pretty much a no-brainer, but he's going to be the thought is it's strengthened that he'll be the PM, and the concerns that he's going to go for the no Brexit, and henceforth we pushed him even lower here. So boy, we have really clipped it lower, but looks like we caught it. I mean, come down here. I haven't done anything with cable in a very, very long time here. Going back to the dollar yen, well, we had our bias chart resistance today at 832. And the high today was it 837? I guess it was 837. We since pulled back, so about 10 pips below what we had for our bias chart resistance. Basically, just revisiting that line again. So obviously, with the strength of the dollar, I still think it's obviously a selling market, but with the strength of the dollar, certainly allowed some short covering to come in place. And Australian dollar here, RBA minutes, not really anything to write home about. So we henceforth started to slide back. Remember, we had our bias chart resistance from yesterday, and we kept it the same today, which was 70.48. High for the move so far had been 70.44. So not bad, off 4 pips. Basically, we just go with the touches as we go with. Sometimes we'll see if we can confluence that with Fibonacci. But the one thing that has not helped these markets has been that, has been these starting pairs. Man, they've just been down, 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 like with a submarine horn. And we'll roll into that. Another market that I do want to go and touch on has been the gold market. And we did go on and slide today and pair back. We're kind of jumping back a little bit. We've got some resistance in here. But you can see, I usually don't use 4-hour charts, but I think it's a little bit more clearly defined here. I was looking for a break lower. I'd done a little bit of scalping, but came in at a very crappy price. So I ended up just scalping out for $1, but I was looking for this market to break lower. And sure enough, that's exactly what happened. We broke lower. And did we break lower with a vengeance? I was expecting on the spot for us to get to here to the 1405 area, because that was going to confluence. Look, you got this trend line coming in, and you had support here. Well, when I pull it up, it doesn't look like support there, but it's support. I think it's going across on the 30-minute. We can take a look at that real quickly. Share here. Yeah, you can see that coming across. You see that? So I had this great confluence here, and I'm thinking, okay, this market is going to fall apart and just roll down. And I caught a couple times here, nothing of any real significance. And then this morning I came in saying, oh, I think this thing's heavy. I think it's going to go on and drop. And I was a little bit impatient, and then just came in right there and ended up spending most of this time, underwater until I said, you know what? And you can see how many times we revisited. I think it's right in here is where I came in, or right there. And I'm saying this bar, so you can see I was stuck with it for a while. And I'm like, you know what? This is really piss poor risk reward at this point. Just, if you're able to get out, going to get out. And I grabbed a buck out, and then we did bounce right back up again, but we rolled over, and then we finally saw this market really come apart and come into that area. If we do fall here, and there's a potential, I think, that we could actually come all the way down to 1385 if we break below this trend line. This trend line is key, on the way, right here. Well, we have to pull it into a 4-hour chart. As I said, I generally don't use 4-hour charts, but you can see the trend line a lot clearer. And why I thought we were going to go on and break down, then I thought the area it wants to get down to is 1405. You might see a little bit of an overshoot. But like I said, that's why it's so important. I think Dale mentioned that in the webinar, on Facebook webinar today, about patience. And, this time I impatience, cost me, because like I said, I felt comfortable selling this thing and had taken $1 here, $1 there. I think I grabbed $2. Actually, I think on the first dip down on the retail sales data popped up. But this was, I thought, this is it. We're going to go in and break down. We'll at least break down $3, but I'm thinking down to 1405. So my impatience cost me at least an opportunity cost. But here's the key thing: is you got to be careful here with this gold. If we do close below 1405, I think there's a move down here to 1385. I don't ever track silver, but you can see here with silver, we've got a gravestone doji here. And if we slide back below this, just a quick eye drop or eye look on here, it looks like a move down to about 15. I said 1525. It looks like probably 1523 potentially. We'll quickly just jump into the cross rates and wrap it up there. So as I said, you've seen these markets. I mean, these sterling pairs have just come under some kind of pressure like you wouldn't believe. We had been targeting 77.40 from analysis from the beginning of the week. Market appears ready to test the 78.47. EMAs are still a bit stretched for a downside move. Oh, yeah, here we go. On our way to 77.40. Well, we got to 77.40 today, and I'd mentioned since yesterday, hey, tighten up your stops at least, or if you want to put your limits just below there for a real big dip, but be wary that we can jump right back. And we've come 60 pips off the low, but you can see this disparity right here. So I think we cleaned out some people pretty well. And there was another level of support that we actually put in yesterday, not yesterday, but this morning during the European crossover webinar. I haven't done that much with the cross rates. I was trading a little bit, but I like to jump in and out. And some of these trades, they've been very profitable for Amanda. You have to really stay with them. And I don't like the idea of saying I'd rather just get into something that at least for my I want to say my personality, trading personality, I like to just day trade and scalp. So some trades, you'd be stuck sitting there. Like, give you an example, was a Euro Aussie. And I did some trades here in the Euro Aussie. I remember even taking this trade up here right up here with the Euro Aussie right near the top. And but I didn't hang on for long. Sometimes we would just sit there, 2-hour charts, and you're sitting there very minor, and then all of a sudden finally you get going in one direction. So if you're into a swing trade, Amanda does a lot of swing trades. These trades have been very profitable, especially with the sterling pairs, if you've been willing to hang on. You can see here where these markets are just as quiet can be, and then another slip down to the floor on this. Looking at the Aussie yen, I think we kept our bias chart resistance the same, which was 76.19. The market really hasn't done anything of any real consequence. Look, here's, let me see, Aussie yen. Yes, we actually moved it down here, 76.06. So we did move it down to 06, even though the previous day we were at 19. But the market was having some tough times trying to get up in here. So nothing much other than that. That's just a quick recap of what we stand here. Flipping it back to the majors. As I mentioned, the euro continues to be under pressure. That has a lot to do with these bunds. The bunds had made new all-time highs, new all-time lows in rates. And this euro is just really succumbing to the pressure of not being able to get past this 1285. I mentioned this on the European crossover webinar. Last week I was saying, well, it was great. We'll get to the daily and we'll close on that. I mentioned that it was great that the euro had closed or secured the close above, let's pull this back, had secured that close back again above the 1262. But at the time I said, hey, but we need to get past this 1285 to generate some upside momentum. Well, I thought that's just a matter of time. Like maybe it was going to do the next day or whatever. Maybe even, it was definitely yesterday. Heck, this 1285 is working like a freaking lid on this market. And so I saw yesterday I was covering with the guys, I think I even mentioned it here, but in European crossover, where one of the Societe Generale strategists was saying, hey, look, what more is it going to take for this euro to go and get moving higher? And he was saying, hey, if we don't get above 114, not 113, 114 the next week or two, there's just not much this thing can do. And you're certainly seeing that. I think people are just frustrated. I mean, I would have thought we'd have just taken this out. Look, here we are just rolling right back down the hill again. So it's really had a very tough row to hoe. But that's all we got for today. Thanks for joining here on the FX Daily Wrap-Up. And like I said, you may want to go on and consider taking advantage of the ForexAnalytix subscription, $10 for, $1, I apologize, for 10 days. And you have the opportunity to not only have the analysis across different disciplines, whether it's harmonics, basic technical, but you can, but also you have the opportunity to be there in the chat room. Got a lot of supportive traders. Everybody's sharing their information. Blake's there all the time, so I certainly would go in and consider joining and being a member. There's a lot of opportunities, a lot of advantages to go and doing that. And once again, you can take the 10-day trial for $1. Thanks again for joining us here on the Daily Wrap-Up.